Bismillah ar-Rahman ar-Rahim. Nahmaduhu wa nusalli ala Rasulil Kareem. Amma ba'd. Assalamu alaikum. Wanakkam. Good morning to each and every one of you. This is Sharif from UAF, and I would like to take this opportunity on behalf of UAF Chamber of Commerce in welcoming you all to this special session on Islamic banking, Islamic funding, and Islamic financial products, and so on. As you all know, that we start our session by invoking the blessings from the Almighty, and to do so, I request Brother Nadeem to recite few verses from the Holy Quran, post which we will commence this session. Over to you, Nadeem.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد صدق الله العظيم.
Jazakallah khairan. May the blessings of Almighty shower on all of us. As you all know, we have already shared the framework of our session today, but for good order's sake, I thought I will mention it here. The session is basically, we'll first start by giving the key updates and initiatives of what UF has done for the last month, July, and this month, which is month of August, by our DG Habib Saab, post which there will be a small brief on what Islamic banking is all about, but by our advisory member, Janab Jamal Jafar Sahib. And then the panel discussion will start, where we have two members from Rehbar who are here today, post which, depending upon the time, we will have a Q&A session where each and every one of you can ask questions to our panel, and then we will move on with the session. Last but not the least, the vote of thanks will be given by our eminent director and also former regional director of RBI, Salafatullah Saab. Now, to give the key updates, I request Habib Saab to share the same. Over to you, Habib Saab.
Assalamu alaikum and good morning to all of you. So I'll give you a brief highlight of what happened in the last 2 months, July till now. We had a Star Trek session. Brother Salahuddin Palur was the key speaker, and Rehana was the moderator. We had 120 members participated in that, and it was a very good session, I should say. We keep updating you the quarter report newsletter, and we also had some new members who joined in. Zaina Milwala, women member, has been part of us. Yes, the 75th Independence Day was being celebrated across the country in a grand manner. So as in our UAF, the homes also. These are the pictures you see in Tiruvandagod girls' home and as well as Tanjavur boys' home. I hope everybody did celebrate this. These are a few pictures of the other members who have celebrated it. So the membership engagement, we had a lunch with Mr. Salahuddin, myself and Sajid, and all the office staff from the UAF participated in it. It was a very good luncheon event. Yes, regarding the last month one, we had, Mr. Salahuddin handed over the Kiswa cloth. I think this goes to our friend, Mr. Ubaidullah. We also had an interaction with the Islamic, with Whitefield, and also another meeting with Arshad. Move on. Interesting one was Kejriwal, that LCM has become part of the Twin Health, which is a good news for us. Last Sunday, I don't know why you included this. Last Sunday, we had in Chennai, they have this initiatives called as Happy Streets, which has been happening. Annanagar it was, that I was part of it, and I had the opportunity to play TT with the CM. I think this initiative should go across Tamil Nadu, is what we've been telling them. These are the pictures you see from the members column. Rihanna meeting Mr. Abid Junaid in London. And another one is the luncheon meet with key people, including diplomats and along with Barkadat. The members' achievement is, again, Salahuddin, this year's Hajj Arafat, it was a live khutbah in 14 languages. These are the achievements. A senior member, Mr. Muhammad Razak, was given as a recognition in the Chartered Accountants of India. There was a tie-up signed by the Honorable CM for the Crescent Incubation and Innovative Center. Yeah, our trade summit, which is supposed to be in November, for some reasons we are postponing this to the March 2023 because time is short and the communication will come shortly, and the exact dates we will announce. So sorry for the for the inconvenience. The time is too short for us, and we thought only things are better now. So more details will come to you. It will be in the same Chennai Trade Center. That is going to be not in November, it's going to be in March 2023. Thank you, members, and I hope you have a good session here today with the Islamic finance. Thank you. Over to you, Sharif.
Yes, sir. Thanks a lot for the key updates, sir. Highly appreciate. Now it's time for the panel discussion today, for which we all have gathered. I would like to take the privilege of introducing all the panel over here. First of all, the first person, I do not know how to describe this person. Normally we use the word best of both worlds. I would just rephrase it and say best of both banks. A person who has got immense experience, 4 decades plus experience, both in conventional banking as well as Islamic banking. A person basically who has exposure in each and every aspect of conventional and Islamic banking. I do not know how many of you know that he is a certified member of Indian Institute of Banking, and he was first rank holder in the exams held all India across all banks in the year 1983. He is also board member of UAF, where he advises us on all key aspects, and he is none other than Jamal Jafar Saab. And number 2 person on the panel is basically the COO, Chief Operating Officer of Rehbar Financial Services. Young, dynamic, I do not know how to describe this man. He is a Hafiz, he is a Alim, he is an MBA graduate, and has got close to a decade experience in Islamic finance. So he's here to share what Rehbar is all about and how he can serve and provide services that can be beneficial to all our members. To support him, we also have the Chief Business Development Officer from Rehbar, who is Mr. Azhar Ali. Mr. Azhar Ali is basically a commerce graduate with close to 2 decades experience in banking and NBFC, out of which 5 years in Islamic banking. He has done immensely for Rehbar. He is also here in the panel to support us. Last but not the least, the person who needs least of introduction, our director, the former regional director of RBI, Mr. Sadaqullah Saab, is also there in the panel. So we have a panel which is rich of experience and also youth, a mix of both these things. And with this remarks, I would like to hand over this to Jamal Jafar Saab, who will give a brief on Islamic banking, post which we will start the session. Over to you, Jamal Jafar Saab, to share on Islamic bank.
Assalamu alaikum wa rahmatullah. Bismillah ar-Rahman ar-Rahim. It's really great to see my brother Dr. Sadaqatullah, Abdul Rakib Saab, and all the dignified members of Rehbar and the dignified members of United Economic Forum. It's indeed a pleasure to conduct such a meeting. It's more important that we share knowledge here and we share understanding of Islamic finance that's going on in India, especially from an organization and its executives who have been very active and recorded a good growth in their portfolio. Islamic banking has been a challenge across the globe. In fact, it all started in Egypt in 1970s, and the first Islamic bank was established in UAE in the name of Dubai Islamic Bank in 1974. Thereafter, the next big institution was Kuwait Finance House in Kuwait, which, as not many people know, that it's a commercial trading organization, but supervised by Waqf Board of Kuwait. And their license remained so till 2004. Though in the banking circles, it is still known as an Islamic bank, but it had a trading license. Actually, the real boost to Islamic banking came after 2003, when countries like Kuwait also introduced the Islamic Banking Act. And from 2004, Islamic banking started in Kuwait also. Oman was a late player. They came into the market in 2012 and so on. Saudi, as you all know, it does not have a specific Islamic Banking Act, but the banks choose whether to operate under conventional mode or under the Islamic Sharia mode. And there are a few banks which operate in Saudi have been huge, and now they have set up specialized Islamic banks. From a very humble beginning, Islamic banks have come a very, very long way, and their assets are almost close to $2.5 trillion now. And as per the 2021 November statistics, Islamic assets account for almost 6% of the global banking assets. As I said, it has been a challenge to come up with products, to come up with solutions, because the customers have been used to conventional banking. And when they come to Islamic banking, we need to provide them solutions which are suitable to them from the banking perspective and which also comply with the Sharia regulations. It's always a challenge. In this, organizations like AOFI in Bahrain, which is Audit and Accounting Organization for Islamic Financial Institutions, they have taken a very, very long stride in terms of standardizing the products, coming up with acceptable documentation, and they have a very, very good Sharia board which practically represents every country which has Islamic banking. From that perspective, Islamic banking right now, it is still an evolving field. It is with the cooperation of the bankers and the Sharia board that we have to come up with various solutions. And that's being done, alhamdulillah. Coming back to India, it's always a challenge here to conduct banking under Islamic principles, because we do not, as a country, we do not have an Islamic Banking Act. And coupled with so much of regulation in terms of taxes, it is a challenge to operate under an act which complies with Islamic principles. And therefore, the direction has been to establish NBFCs and credit cooperative societies, and we choose to operate under Islamic regulations. Now, the one thing has to be made very clear: Islamic banking is not restricted to Muslims. It is a banking under the Islamic principles as propagated by the Quran and the Hadith. Therefore, because it's a wrong notion in some of the general customer circles that Islamic banking is only for Muslims. No, Islamic banking is universal. Just like British banking or any other banking, it's a banking based on certain principles which are here derived from the Quran and the Sunnah. With this little introduction, I'd hand over the mic to the representatives of Rehbar, Sheikh Rashid Sharif, and Ms. Azhar Ali. Inshallah, all over to you, sir, with your presentation.
Thank you, Jamal Jafar Sahab, and for the lovely introduction and background on Islamic finance, Islamic banking, both in outside India as well as the nascent stage which is in India. So also I noticed a lot of people on the call who we have interacted with, and some of them are my mentors. Abdul Rakhib Saab is there, who has been working in the field of Islamic banking and Islamic finance in India for a long time. And the work that him and ICIF, that is the Indian Center for Islamic Finance, has done, I think that warrants a separate discussion in terms of how they have lobbied the government and how they have tried to bring Islamic banking into the country. But like I said, if we can have a separate session for that, that would be completely worth it, inshallah. But coming to Rehbar, so our approach was slightly different from what ICIF and Abdul Rakhib Saab was following in terms of trying to get the government to allow and amend the banking regulations to allow Islamic banking in the country, and meeting various finance ministers and so on. But what we said is, within the current regulations and within the current legal framework of the country, what is it that can be done? If we are not getting a banking license, if we are not able to take deposits, there is still a lot that can be done within the framework of the Indian law and the the trade activities which are allowed in the country. So with that background, almost a decade ago in 2012, brainstorming started, and people like M.H. Khatkate, who is considered father of Islamic finance in the country, and Sharif Kotapura, Mudassir Beg, few people got together and they brainstormed on what can be done. And Rehbar Financial Consultants was incorporated in 2013 with the mission of enhancing Sharia compliant value creation for businesses and investors while bringing them together. So the idea was, we will bring investors and businesses together and connect them, structure the deal in such a way that both parties benefit and value is created for the economy and for the community. So like I said, more than a year of brainstorming went into it. People from Islamic finance, private equity, IT, and other professions got together, and they did this brainstorming. And it started in a small way with only about 10 shareholders who committed 3 lakhs each. And that was the initial seed capital to start Rehbar. And then we worked on a P2P model connecting investors and businesses. Then as things went on, regulations in the country changed. There was P2P regulations that came. There were other regulations that came. So what happened is that we arrived at the current model, which is shown on the screen, where we have SPVs, special purpose vehicles, RER 1, 2, which basically we collect the funds from the investors in these pools, SPVs, and then from there we invest through various financial products, which we will see in the next screen. And RFS, that is the parent company, facilitates the investment and ensures that the businesses repay the profits, which is then again returned to the investors. So there are CCDs or debentures which are issued to the investors, which have a variable profit sharing based on the profit that is calculated on a quarterly basis. So this is, in a nutshell, this is our model. What is the role that Rehbar is playing here? Basically, we bridge the gap between businesses and investors. So businesses, they want funds for growth, and investors, they want to invest their funds. Businesses do not want to give up equity. That is, they do not want to give a partnership stake. And investors also don't want their funds to get locked up in the equity of the company. They want easy liquidity. So we are able to give a structure where neither the business has to give up equity, nor does the investor have to lose its liquidity. That is, they are able to withdraw the funds at a short notice. And businesses want to pay out based on the business performance, and investors also want consistent returns. And businesses look for people who have expertise to structure the investments. Likewise, investors also look for a third party who can analyze the investment. So people do invest on a one-to-one basis or on a individual basis, but then they don't have a third party who is actually structuring and analyzing whether this is a good opportunity or not for them. Businesses don't want to manage 50, 100 investors, and investors don't want to manage 10, 15 investments that they have made. So again, that is where we bridge the gap. And we act as a long-term financing partner for the business. It's not only the current deal, but also subsequent deals and subsequent growth requirements that they have in the future. And likewise, investors also look for someone they can rely on for the larger investment and financial goals and plannings that they want to do. And of course, Sharia compliance is the foundation of everything that we do. So we make sure that everything is Sharia compliant.
Yes, thank you so much for your very, very brief and very in-depth introduction of your activities. In fact, modern banking, the function of a modern banking is almost like a broker. He brokers between the investors and the consumers. Now, just to be for our audience, would it be possible for you to briefly describe what sort of products that you have on offer in Rehbar, and which sector do you cater to?
Assalamu alaikum wa rahmatullahi wa barakatuhu. First of all, it has been an honor and a pleasure to be in this forum, and it has been a long request and an association to have with UEF. I think the goal of UEF and Rehbar seems to be same. So we should have actually got connected a lot early, but to synergize, I think there's a saying better late than never. Alhamdulillah. So just to add what Jamal Saab said and Rashid Bhai had added, we have a small feeling that in the country when I go out on the field to meet the community team to make them understand what Islamic finance is, they come with a small frame of mind saying Islamic finance hai na, de do humko, free mein dena hai paisa. That's the concept that people are carrying with. They don't understand that there's a commercial this is a commercial activity, and it has got a two end to knot. There is somebody who's looking for something, and there is somebody who's expecting something. So this is where we are kind of playing a vital role in balancing this and saying that we are trying to build an ecosystem within the community who has abundant money, and the community whose need of money, where they are lacking to get their businesses built. So with this thought, we started to understand how we can be with the framework of the country and operate practice Islamic finance. And we started understanding what is lease. Basically, lease is a very simple product where any business which needs machine, equipment, plant, vehicles, commercial vehicles for their business needs, they would make a request with us to understand that if they would want a machine, we would evaluate the business, understand the need of the business, and then buy it on their behalf and lease it to them on a monthly rental model. And end of a tenor, there is a tenor that we would agree. We would understand their comfortable cash flows of the organization, and then range the tenor anywhere between 1 year to 3 years to 5 years as per their comfortability of repayment of their rental. And end of the tenor, we would estimate a small residual value where the first right of refusal would be given to the person who has leased the machine. And then if they say they don't want it, then we take machine back and sell it on the market and return the funds to the pool. That is one of the product that we have. The other product that we have structured is a long-term working capital, and we see that there is less scope of for long-term working capital in the country, basically because we would have scrutinized over 3,500 to 4,000 potential businesses to invest in. And we find not more than 7 to 8% of the entire business pool what we have scrutinized doesn't have an interest-bearing borrowing, which means if there is an interest-bearing borrowing, this is an obstacle or a barrier to associate with Rehbar on a working capital, long-term working capital product. Basically, it says that the community has in whatsoever way got associated with the conventional banking and have availed the facility of an interest-bearing loan, and hence it becomes a barrier for us to associate with them on a long-term working capital model. However, there are businesses where we have seen that they have not taken any interest-bearing loans in the past, and we have structured a couple of such products as well, and alhamdulillah, it is going very well. This product attracts a collateral as well, and this collateral is basically to ensure that there is no fund diversion. If there is a business loss, the loss gets booked on the company. And this is a long-term working capital where we have seen less takers. But there's another very attractive product which is called as a small-term working capital. We call it as a project-based financing. This product is a quick pro co, basically what we call them as. Any business who's doing their regular business activity and suddenly he bags an order of maybe 1 crore or 2 crores, and he needs to execute that in a short term, maybe anywhere between 3 months to 6 months to 9 months to a year, and he is short of working capital. So what we do is we do the study of this project, understand what is the profit and loss of this project, understand the the specialization of the organization, the past history of the organization as to how they have executed such projects in the past, and fund only the working capital that it's required to execute this project, close the transaction, build the product, and get out of this project. Just to give you a small example, I don't know, some of you might have gone to this Kannur airport, which was recently inaugurated. So the interiors of the Kannur airport has been funded by Rehbar as an organization to a company called Square Associates, who bagged the interiors of the Kannur airport. In fact, Kannur airport had certain non-Sharia compliant activities. We excluded them from the project, and we funded the project. And Alhamdulillah, the project got executed well, and we got a good return out of that project as well. So I'm just giving you an example of this product. These are the three prominent products that we have. We are kind of piloting the home loan product for the basic need of our individuals, and also trying to do a couple of more products, which is under R&D session. And this is where I think we need to say Rehbar is trying to strive for more products innovation in the book.
Thank you, Azhar Saab, for your brief description of the products. It's always a challenge, Azhar Saab. Internationally, the Islamic banks that face is in financing working capital. It's very easy to finance capital, equipments, goods, and so on. When it comes to working capital, it's always a challenge, and some banks have now come up with certain documentation to fund the working capital based on Tawarruk structure. However, when you spoke about lease and other things, I think that's where you could help the small-time manufacturers or people setting up their manufacturing units. When I say small, maybe in the 1 to 2 crore region, probably you look at where the capital expenditure could be in the region of 50 to 80 lakhs. So that's where you could come. Now, what will be your criteria in terms of credit scrutiny of the company, and how far you think the investors will be confident enough? Because ultimately, the investors have to have confidence in Rehbar, its credit analysis, and in safeguarding the funds invested with you. What would you say in terms of giving them confidence in terms of their credit analysis? And of course, you spoke about collateral security. Yes, you could touch on that.
Thank you.
I can add one more question to it.
Please.
To Ali sir. Yeah.
Ji.
Sarakatullah. See, how we charge them for the project finance. See, always in working capital financing, how we are going to charge them, how do we factor the interest, instead of interest something, that also you can elaborate.
Yes, sir. I would take the question one-on-one from Jamal Saab to add. Jamal Saab, we are no different from a bank. Our basic criteria to associate is a minimum of 3 years in business, and latest 2 years they have to be reporting profits. And we have kind of said that the minimum turnover of an organization should stand at somewhere around 3 crores. That's the entry barrier. And then we also try and see what is their cash flows, current cash flows, and we understand what is their future cash flows basis their infusion of the new machine. And we try and say that about 70% of your cash flows has to be a repayable cash flow after all your expenses, which means your cash profit is something that is adding to your reserves. So that is something that you can repay to us as an obligation on a month-on-month basis towards the rental, or the profit and principal that we would have fixed for any of the products. And add to what the process is, we in fact go one notch above than the bank. We try and do all kind of ratio analysis to understand. We do banking scrutiny. We do all the loan scrutinization activities. We also take the CIBIL reports and the bureau reports to understand how the credit behavior of the company is, the promoter is, and the segment analysis that we also try and do to understand how that segment is doing by and large in globally and in the country. So this is a small process that we follow, and to understand how they qualify. And to answer to Jamal Saab's question, and if I'm clarified, I can go to the second question.
Please go ahead.
To add to Sadaqatullah Saab's question, how do you charge project finance? Sadaqatullah Saab, when we do a project analysis, we try and understand what is the margin in that project. So we try and expect estimated IRR return of maybe somewhere to the tune of 20 to 22% on a risk to return basis on a project based finance. So it is evaluated on the risk of the project. If it is a low risk, we also extend a lower IRR, and we fix the percentage of the profits for that project. So if there is a project that is that has got to execute over 3 years or 3 months, we first understand what are the costs that are involved in it, what is the preparation or preparability of the organization who can take the project and execute it well, what has been their past experience and past trend in executing such projects, and what is the viability of this project, and then only we associate with the project. And at the end of the 3 months or 4 months, they would submit their accounts with us and say that, sir, we have executed the project, we billed the project to the vendor, and we've returned the payment, and this is your profit and this is the loss that we have, profit and whatever, they will share the profit and loss statement. This statement would be given to our external auditor or a chartered accountant whom we have associated with in any particular geography. They would evaluate, they would scrutinize if the statement that is that has been submitted is fair enough, and then we share the profit and loss on what percentage we have agreed in the initial phase. And that's how we close a project-based financing, Sadaqatullah.
Thank you so much, Azhar Saab, for your clarification. In fact, coming from an economy where people benchmark most of the return as well as the cost on the banking rates, and that's not only here, that's universal. Whether it is Saudi or Kuwait or UAE, everywhere when the customer says, he walks into the Islamic bank and says, look, this is a rate I get in a conventional bank, and this is a deposit, interest on deposits that I get. Yes, it is here that you face a challenge when you tell them profit could be variable, and the risk profile here is different. So that's where the criteria of IRR on a project is very handy, and you explain to them, this is what I expect, and therefore this is the return we expect to give to the investors, number one. Number two is on the safety of the investors' funds. That's always a primary thing, especially when it comes to Indian economy, where a certain amount of deposits are guaranteed by the Reserve Bank of India under the guarantee scheme, up to 5 lakhs per customer, whatever. So the question of guarantee or the safety of their funds as an individual also is a factor that is there in their mind. What would you say to dispel these sort of, not fear, but an anxiety that an investor could have? And number two, from the consumer's point of view, from your experience of about 9 years in the field, whom you think is more profitable in Indian scenario? It's a trading unit or a manufacturing unit, and from the perspective of Islamic banking, because when you take a manufacturing sector with a long gestation period, obviously the return to the customers are a little slow. It could be higher over a period of time, but initially it is slow. So which one would you look at? These are two different angles.
I request Brother Rashid to take the first question.
Sure. So regarding the security that investors have for their investment, so mainly it goes back to what Brother Azhar has also already covered in terms of the security that we have, in terms of the various steps that we take to ensure that the investments are done on a prudent and with proper due diligence on a prudent basis. So that is the first step. And second step is, since everything is asset backed. So in the case of project finance, we have a collateral. In the case of leasing, we have the assets that we have leased, which are on our balance sheet, which belong to us. So at any time, we have assets which are worth more than what amount we have funded, right? So that is the main security that the investors have. And since these are CCDs, which is almost like an equity in the company, so they are de facto owners of the assets which are there in this pool. So that way it is, and also we try to make sure that we have low risk, low return type of investments. So we don't go for risky investments. We avoid sectors with high volatility, sectors where liquidity is low. Those type of investments we generally avoid. So we take various measures, and we have certain reserves that we maintain from the profits. So like we make about on an average about 14 to 15%. I will show you the slide also on our deployment, but we only pay out about 10% to the investors. The reason is, one is the expenses, but two is also certain reserves that we maintain to take care of bad debts that might come in the future and any other liquidity requirements as well. So whatever prudential norms are there that the banks follow, we also follow it, but in our own way and with the guidance of our board and investment committee. So that is the first point. And second point is, of course, there's no principal guarantee in Islamic finance, but we say that more or less the principal is safe because the deals are so diversified. When an investor comes into the SPV, he's not putting his funds in one business. His money is diversified across various businesses, right? So that takes care of, so even if one or two deals give lesser returns or even go into loss during a period, the other deals all make up for that. So maybe there might be a 1 or 2% reduction in the profits, but there should not be an impact on the principal person. And I think this question was, there was another question.
That was about the your experience on the nature of the consuming customer, the trading and manufacturing.
Yeah. So I think, like you correctly pointed out, it is the manufacturing segment has lower profits, longer gestation period, but it is since it's asset backed, we prefer those kind of industries where we can give the asset and it's a predictable sort of a thing. Whereas trading requires capital, it has higher profit, but it also is a higher risk. So generally we try to stay away from those type of.
Rashid Saab, I have one question with you. How does the products Islamic financing of Rehbar differs from your sister concern that Mount Judy? I mean, can I presume that it's for larger projects or something?
Not exactly. It's the structure which is the differing thing. So we have done deals which are larger than the deals that Mount Judy has done, but the structure is different in the sense that we do not take equity in the company that we are investing. We either give assets or we give a mezzanine debt, which is a profit sharing debt. Whereas Mount Judy invariably takes equity in the company, then tries to grow that company over 5 years and then sells the share to get a multiple of its returns. So we get regular returns in the form of lease rentals or principal repayment, whereas they get a bullet repayment when they sell their stake in the company.
Okay. And they are registered under SEBI. You are registered with?
We are an operating lease company, which is a non-regulated activity. So we do not require
it is? Is it a sort of NBFC?
It's not an NBFC. It's not a financial activity. Operating lease is the normal business activity. So we do not require to be registered under any regulator.
I see. But even project financing, your home loan products doesn't require any.
So 70% of our portfolio is in operating lease. So this home loan and project finance is a minor activity for us.
Okay.
We're basically regulated by the MCA's bylaws, Sadatullah sir.
It's a private limited company. We fall under the Companies Act. And since the financing activity is a minor activity, so NBFC regulations are not attracted.
Jamal Jafar Sahab, there is a question on the chat box. If you may give permission, I would like to ask, is it okay?
Please go ahead.
Yeah. See, in chat box, there are a few questions. One is from Mr. Ismail for Kaka. He's asking what is the average ticket size of investment? And there is one more, Mr. Zain, who is asking what is the maximum ticket size? If you can explain what exactly it is, that would be wonderful, Rashid.
Okay, so there's two sides. One is the investor side. So the investor can invest starting from even 2 lakhs. And there's no upper limit for the investor. And for the businesses, we generally start at about 10 lakhs for lease and about 30 lakhs for the profit sharing product. That is the minimum investment ticket size. And the maximum, we have gone up to 10 CR plus in certain cases. But generally, to start, we won't go beyond 3 crores maybe.
Okay, the maximum is 3 crores. Okay, there is one more question from our eminent member, one Mr. Fahim, and he's asking, let's assume that, somebody takes a asset, for example, a vehicle for his business amounting to 10 lakhs. What would be the difference in terms of costing when it is through you or through a bank? If you can just highlight what would be that.
Okay. So like it depends on the vehicle, it depends on the business also who is taking it. So the banks have various rates that they give depending on the customer and things like that. But it cannot be compared, IRR and the bank's interest rate cannot be directly compared, because when you take a loan from a bank, it's a interest-based loan which has an interest component, and only the interest component can be used as a tax shield. That is, the tax saving is only on the extent of the interest that is paid by the bank, by the customer. Whereas in our case, the whole rental which is paid is an expense which can be claimed as an expense. And so the net cost, if you consider the tax shield, it comes to about the same. But if you look at it in terms of numbers only, our IRR is about 16%, whereas the bank, they might get it at about 10 to 12%.
Yeah, okay. Shaukat Sharif Saab, our director, has asked one question. Saab, if you're there, you can unmute yourself, or you want me to ask, Saab?
You can go ahead and ask.
Yeah, basically the question is that, will you fund hospitality project like transportation for tourism, luxury, restaurants, rooms, for that?
We can. There is no restriction on that. It depends on the ticket size required. If it's like starting a 5-star hotel or something, then of course, one is we need to see the track record of 3 years. So it should be an existing project. And our ticket size to start will not be more than 3-4 CR. So if it comes within that and it's a profitable project, we can definitely look at it. And of course, Sharia compliance. In some cases, especially hospitality industry, there are a lot of aspects that become non-Sharia compliant. So we'll have to look at that as well.
Great, thanks a lot. Over to you, Jamal.
In terms of duration of the loan, especially when it comes to housing loan, they're generally in India, it's about 15 to 20 years is a loan period, or even they go up to 30 years. But would that be possible for Rehbar? Because in terms of the duration, what maximum do you perceive that you can expose yourself to?
Azhar?
First of all, Jamal Saab, I would say the journey of trying to launch the housing finance was actually a great it was a dream for our chairman Sharif Kottapurat Saab. And when I came on board, his insistence was we should help our community come out of this home loan, who's been taking it from the conventional bank. I was also too gung-ho about it because I also come from a background where I've been in the asset financing division for banks and NBFCs, started banks, NBFCs, graduated to even up to getting an NBFC into an SFB bank as well.
Yeah.
So, I was also happy to say that, no, we have to do this launch of housing finance. So we started the survey, research and all that. All our community people were happy about understanding how the housing finance would help us getting out of riba and all that. So it was all word of mouth that we understood, and we realized that it is just basically a lip service, because our cost of fund is the primary factor, as you rightly pointed points ago, that we have to balance the expectation of returns from our investor to the expected IRR to balance both the returns and investment. So our housing loan is basically factored somewhere to the tune of 14% IRR, and our CCDs are issued not for beyond 10 years. So any CCD that we issue has a period of 10 years, and then after it gets compulsorily converted into equity. So we by law we are restricted to give nothing more than 10 years. Because otherwise there would be an ALCO mismatch, asset liability long-term mismatch. So to answer your question, our home loan stands at about 10 years. And after the launch of the product, we have not seen a warm welcome by people who had, worded that, would be looking at taking it. I think this is just to say that, we have piloted this product. However, our analysis today feels that it might not take off.
Very rightly said, sir, because why I asked that question is most of the Islamic banks have had that problem, and there are two things. One is asset liability period matching, and the second is the profit rate volatility that we take on books. We don't have an instrument, at least in India, to hedge the difference between the liability and the asset age. That said, especially in India, where most of the banks are controlled by the government or funded by the government, they can take a liability of 30 years or asset duration of 30 years on their books, and probably there is very little for them to hedge their books in terms of cost of funding and on the liability. But for us, but for an Islamic bank which has a profit payable to the investor on a periodic basis, it becomes extremely difficult to take long-term asset portfolio, both from the funding aspect as well as the management of the profit rate risk or the interest rate risk management. Of course, now in Islamic banks, we do internationally, we do profit rate swaps to hedge our risk. And that's being done on a Tawarruk and a Murabaha basis, on a rolling Murabaha basis, which has been there since the last 5 years. Of course, that sort of instrument is not available in India, and it is practically not possible for you to manage. So invariably, your asset has to be on an average duration of about 5 years, which is ideal for financing vehicles. And then the difference between in a housing, it can be a short-term loan for a development or for a repair, probably that you can handle. But how do you address the concerns of the investors in terms of such, as Brother Rashid said, it's always a benchmarking against the cost available in a conventional bank. And that's, I think, the most difficult part to convince. If I go to a conventional bank, I get this rate of interest, and if I come here, you say Islamic and you charge me more. And that's the usual accusation against it. How would you handle that situation?
So just to say, we have been trying to put a chart to understand what is the cost between what is the difference between a loan and a housing loan of a community. So the very, very prime reason to pick up the housing facility is only a Sharia compliant model. Other than that, I don't see we being competitive over the current banking segment. So it wouldn't be right from our part to say that we are competitive in the market at all for this product. However, having said that, we since we are trying to address a problem of the country, we said that this is a product that needs to be in our product kitty, so that if there is a person who is in a dire need of it, goes for it. And alhamdulillah, we have seen about in the pilot, we have seen about 7-8 profiles who are very serious about taking this facility and they have availed it. And they say, this IRR is really not a barrier for us, because it's about 3-4% higher than what I'm paying to the bank. But I'm satisfactory that it is a Sharia compliant product, and hence I have a life after to answer, which is more vital for me. So they come with a very very strong religious barrier there. So, and they take this facility.
Okay. I have a question.
Please.
Regarding your leasing program as well as the working capital loan, whether the lease rent or the margin on lease that you are charging varies from person to person or from person to person, or is it uniform? Number two, regarding the working capital loan, what you are giving, there also, depending upon the risk involved, whether you have margin higher or lower or variable, or is it a constant? Number three, with regard to investment, what is the minimum lock-in period?
Want to take Rashid?
Yeah, sure. So it does vary from client to client. It varies depending on the type of asset, the secondary market availability of that asset. If it is a very common asset like a Tata Ace vehicle or something, then we see it as a lesser risky asset. Whereas if it is a specialized asset, which is only used by very few people, then there's not much of a marketability and it becomes a high risk asset. So there we have to put a higher IRR. Likewise, if the client is a very strong client who does not have much borrowings and has a good cash flow, then again it's a low risk deal for us and we can do it at a lower IRR. So there is a range which can, like for example, for lease it varies from say 15% to 18%. For profit sharing, it varies from 17% to 20% or 22%, depending on the risk and return profile. So that is there in both of the case of lease as well as working capital. And there is no lock-in period for the investment. If the person is withdrawing before 6 months, we have an exit load of about 1%.
What is your track record regarding the payment of dividend for the last 3 years?
If I can just share the screen again once, I'll just show it.
Yeah.
You can see on the slide what the return trends are for the past 5 quarters. So the last quarter, what we paid is about 9.6% annualized. And since the pandemic started, it's between 8.9% to 9.5, 9.6% is what we have given. Before that, we have given even up to 13% in a particular quarter. So the upper line in red is what we earn, the return on deployment, and the lower blue line is what we pay to the investors in terms of the net profit for the investors. So that is one. And then the other slides also, you can just have a quick look. It shows the amount of funds deployed. So it starts at about 44 crores and goes up to about 59 crores in the last quarter. And portfolio is diversified across various industries, and the investment product split is mainly in operating lease. We try to maintain it at about 70%. Currently, it's at about 62%. So, yeah, I think due to the paucity of time, I'll just give it back to the...
Just a small thing. From your experience in the last 9 years, which particular sector Rehbar would prefer to invest in as we go forward? In any particular sector you feel comfortable with, and that can be informed to the audience. So
sure. So any sector that requires a lot of asset investment is a sector that we like. So it can be people who have distribution, logistics. It can be transport providers. It can be even hospitals have approached us for medical equipment. People who are in construction have approached us for the construction equipment. So anything that requires construction, the business is established, and by adding a certain number of assets, they can grow their business. That is a good business for us. Then also we are seeing a lot of startups, which maybe 2-3 year old startups who have a clear path to profitability and who have unit economic positive. That is, by adding more or increasing their turnover, they can increase their profits. So if they want to have an asset light model and have a partner like us to work with, we like to work with such companies as well.
Yeah, one more question. See, in terms of a borrower, you take it as a revenue. Directly, they can book it on their revenue, and they can save the tax. In terms of receipts, it will be a pure profit for your book, and it will add a huge taxation. How do you deal with it?
So we do not pay much tax because the profit share that we are paying to the investors is we are treating it as an interest on CCDs. So it is a deductible for us. So after paying the profits to the investors and after the depreciation that we have on our books, we do not end up paying income tax, because if we were paying the amount as dividend, then yes, you are right, we would have had to pay tax and then pay the dividend. But since
that kind of entry is allowed in Sharia audit?
Yes, it's not the terminology, but the essence that is looked at. So since we are doing a profit sharing, even if we treat it as interest, the Sharia scholars are okay with that.
Okay, for want of time, we are actually on 12:30. So with that, we would like to, have an end for the session. I know that there are a lot of questions which are unanswered, but on behalf of UF, I would like to assure you that all these questions can be sent to us, and we in turn will get in touch with Rehbar and ensure that all your questions are being reverted. This is number one. Number two, I would also like to share that initially what we thought is basically have a webinar and reach what Rehbar is all about. post which we are also planning a physical session where a personal invite to each and every one of you would be sent. And if interested, you are always, invited to join for a personal meeting where we can have all these questions answered. Now, is there any final remark over to you, Jamal Jafar Sahab, post which I request Dr. Saab to do the vote of thanks. Jamal Jafar Saab, is there any final remarks from your side?
Thank you so much. It was a pleasure speaking to Rashid Saab and Azhar Ali Sahab.
Thank you.
Of course, time is always very, very short. Even if you have a 2-day seminar, this can go on. But nevertheless, somewhere we have to start and initiate the thought process. As I understood from Brother Rashid, your preferred assets are basically medium term in nature, more liquid, and which can, in short term, add value to the enterprise. Having said that, I think we had a very fruitful session, and we, as Mr. Sharif said, we look forward to have a face-to-face physical interactive session that could be very helpful and useful to take it forward. And thanks to each and every one of us. We thank Allah subhanahu wa ta'ala for giving us this opportunity to interact with all our brothers, and hope we have enhanced a little bit of our own knowledge and understanding of the subject. Jazakallah khair.
Thank you, Sir Jamal Jafar Saab. Before I could call Dr. Saab, any final remarks from you, Rashid Saab or Azhar Saab, for 30 seconds?
Yeah.
If you want to share final remarks.
Like I said, we've been wanting to associate with UEF for a long time and see how we can work with the members, both in terms of channeling their investment as well as channeling their finance requirements.
Yeah.
If we can act as a platform and help build this type of ecosystem for the UEF members, we would be more than happy to do so, inshallah.
For sure, we will ensure that we act as a catalyst in doing so. Now, for the vote of thanks, I request our director and also the former regional director of RBI, Janab Sadatullah Saab, to give the vote of thanks. Over to you, sir.
Thank you, Sarif sir. At the outset, let me thank the opportunity given to me to thank. So I am very happy about it. I would like to, before I formally thank, since Abdul Rakib Saab is there, any update on this current state of Islamic finance, sir?
Yes. No, the whole thing was we had a PIL in Jammu and Kashmir High Court. And the order has come only 2 weeks back, 3 weeks back. They say that it has to be put again. And then they will discuss about it in a better way. We have to present it to the court, and then we can go ahead with that. And we have got a very good report of the financial deepening aspect of financial inclusion. Usually, the government of India is talking about financial inclusion means opening the bank accounts by the people, Indian bank. The sort of Prime Minister Modi was also telling that we have opened up banking accounts, and also with Jandan accounts and PM Mudra account and all, it has gone back. But there is a big research paper conducted by GIFT, Gulati Institute of Finance and Taxation in Thiruvananthapuram by Professor Narayana. Very good research he has done. And he has focused on finance and faith about Muslims. And it has got a very good research paper. And we are going to press on the government that this has come. But it will take time, inshallah. We are going to do it.
Thank you, Rakib Saab, for your update. It's a pleasant job for me. At the outset, let me thank this Rehbar, our colleagues from Rehbar, who are doing an excellent job for almost a decade now. And in fact, Mr. Sharif came to our, in 2018, we did an international seminar. UEF did an international seminar along with the Kuala Lumpur-based International Economic Forum. And in that, he had come to address our participants. So we continue to engage in dialogue, and I also endorse that we should have a in-person meeting at the earliest. And then I have one small suggestion which you can pass it on, Mr. Ali Saab and Sarif to the management of Rehbar Mount Judy. Now that you have an excellent experience of almost a decade, and whatever best possible within our regulation you are doing, you start an academy, because our people, basically, you can even count the people. Jamal Safar is there, I am there, Rakib Saab is there. A couple of people only, we have some knowledge about finance. Forget the Islamic finance. So you can start Islamic Finance Academy. and train all our people, and definitely they will find excellent job opportunities in the capital market. I think this is my suggestion to the academy, which you should very seriously explore. And then I really thank our Habib Saab and our all our friends in the Pirama Saab, Nadeem Bhai, everybody, Sarif Saab, for giving us this opportunity to host this nice program. We'll continue to be in dialogue with. Thank you very much. Assalamu alaikum. Wa akhiru da'wana alhamdulillahi rabbil alamin.